Okay, so we have a question here. It says Zulu and Tamala are in a partnership, sharing profits equally. On 31st March 2018, the capital account balances were Zulu 40,000, Tamala 6,000. On 1st April 2018, Banda was admitted as a new partner. The partnership agreement stated that Banda would bring in 25,000 in non-current assets and 5,000 in cash. Goodwill was valued at 27,000 and will not be retained in the books. Interest on capital will be at the rate of 2% per annum. Interest on drawings to be charged on a year-end balances at 5% per annum. Salaries would be paid to Tamala 5,000, Banda 4,000. Profit and losses would be shared in the ratio Zulu 3/9, Tamala 4/9, Banda 2/9. At the end of the year, 31st March 2019, the following balances were recorded. So we've got our current account balances: Zulu 1,200 credit, Tamala 6,000 debit. Then we have drawings here. Additional information. Profit before the year of appropriation 63,008. The drawing included payment of salaries to the partners. There was no change during the year on the capital accounts. Required. Okay. First things first, we need to prepare the capital accounts in column format of the three partners after the admission of a new partner. Okay. Then we've also got these other questions here. So we'll be going through the questions step by step. So the first thing here, we need to prepare the capital accounts because a new partner has been admitted. So whenever a new partner is being admitted into a business, okay, what the old partners are going to do is first they're going to tabulate the value of the goodwill. Okay. Colleagues, what is goodwill? You are given enough time to research this. What is goodwill, Mr. Twambo? Uh-huh. Good evening, sir. Yes. Anybody else? Uh-huh. Mm-hmm. Yes. So goodwill, there are two terms I like to use, but also that one is value of a company's reputation. Also, you can think of it as factors that make a business operate successfully. These factors can be the reputation of the business, customer share, brand loyalty, location of the business. Okay. Yes. Okay. Or you can think of it as the extra value of the company due to reputation, customer share, brand loyalty, location. Or you can also think of goodwill as future expected profits. So what happens with a partnership is when a new partner is coming in, since these partners have been working for a while, okay, so obviously their business is established. So a new partner is coming in. So now they do not want the new partner to just come in and benefit, okay, on what he hasn't labored for. Okay, find Zulu and Tamala, they've been running this business maybe for 10 years. So they've built up a reputation, good customer base, brand loyalty. So now this guy Banda who's coming in, he can't just enjoy the fruits of their labor. Okay, he can't just come in and enjoy the fruits of their labor. He has to pay a consideration to these partners for that goodwill. All right. So this is how you deal with goodwill when you are dealing with a partnership. Okay. This goodwill is internally valued goodwill. There are two main types of goodwills. Internally valued, where like here partners determine the value of the goodwill. Then there's also purchased goodwill. But with partnerships, you'll be dealing with internally valued goodwill, where the partners um, come up with the number of the goodwill. So in this question, they've already told us that goodwill is valued at 27,000. Okay. So Zulu and Tamal, they valued the goodwill of the company, which is 27,000. So now this goodwill has to always be written off because it cannot be shown in the financial statements. So it's created, then written off, so that we can see how much Banda has to compensate Zulu and Tamara. Okay. They create the goodwill, then they write it off so that they can find out how much Banda has to pay Zulu and Tamara. Okay. So let me do it like this here. Just make a table. Now, this you're not going to need to do when you're dealing with such a question, but here, I just want to illustrate how we determine how much Banda has to pay Zulu and Tamar. Okay, so here we have Zulu, we have Tamala, and we have Banda. Okay, so before Banda came in, okay, goodwill is valued at 27,000 kwacha. Okay, so we're going to split this goodwill with the profit sharing ratios. All right, the profit sharing ratio, they say that these guys they share profits equally. Okay, share profits equally. So using that profit sharing ratio, okay, if people are sharing goods equally, you can write the ratio as 1 to 1. Okay, 1 to 1 means both of you are sharing the ratio equally. So before Banda comes in, half of 27,000, 13,500 kwacha goes to Zulu, and also another 13,500 goes to Tamal. This is before Banda comes in. Now Banda comes in. Okay. Banda has come in. Okay. And goodwill is still at 27,000. So what we're going to do is we're going to now share this same goodwill with the new profit sharing ratios. Okay. So when Banda comes in, this goodwill will be split like this. Zulu, the new profit sharing ratio for Zulu is what? 3 over 9. Tamala 4 over 9. Banda what 2 over 9. Okay. So Banda comes in. So Zulu 3 over 9 times 27,000. Uh, colleagues, 3 over 9 times 27,000. What do we get? 9,000. Okay. So Zulu's goodwill has dropped to 9,000. For Tamala, it was 4 over 9 times 27,000. 12,000. And Banda, 2 over 9 times 27,000. 6,000. Okay. So as I said, the purpose of what I'm doing here is one to find out how much Banda should compensate Zulu and Tamar, because he's coming in and he's going to enjoy this good rule by the partners. Okay. So Zulu, before Banda came in, he was what's his he was getting 13,500. Now Banda has come in, he's getting 9,000. So you say 13,500 minus 9,000. 13,500 minus 9,000. 4,500. Okay. So by Banda coming in, Zulu has lost like a 4,500. Okay. It's lost like a 4,500. Tamala 13,500 minus 12,000. 1,500. Tamala has lost a 1,500. So when Banda comes in, he has to compensate Zulu with this 4,500, and he has to compensate Tamala with this 1,500. Because by Banda coming in, the money has dropped from 13,500, it's gone now to 9,000. It's dropped by 4,500 because Banda's come in. So Banda has to pay Zulu 4,500. And for Tamala, she was she was supposed to get 13,500. Now, because Banda's coming, she's getting a 12,000. So she's made a loss of 1,500. Okay. So Banda, this 6,000, he has to give Zulu 4,500, and he has to give Tamala 1,500 to compensate them for their losses. Any questions? Yes, he's not entitled to it because he never worked for it. He never worked. He did work for it, and he caused losses for Zulu and Tamal. Zulu was in a loss of 4,500. By him entering, it means Zulu from this 13.5 it's gone to 9 pin. So Zulu is in a loss of 4.5. So he needs to be compensated for that loss. Tamala, she, she was owed 13.5, but now it's 12,000. So she's in a loss of 1,500. So band this 6,000, he needs to compensate Zulu's loss, and he also has to compensate Tamala's loss. Okay. Or they've been given to us in the question. They've given us, yes, they've given us, yes, they gave us in the equation. So goodwill, yes, one thing you must remember is goodwill when you're splitting it amongst the partners. Okay, you're splitting with the profit sharing ratios. All right. Yes. Yes. Any questions, colleagues? Here, as I said, we're just trying to find out how much band has to compensate Zulu and Tamar. Okay, and just compensate them 4,500 and 1,500. Now, in the question, you don't need to do this. Okay, this when we open the goodwill account and write it off, and we put it in the capital accounts, these values will be there. Okay, this, as I said, you don't need to do this. This is just to illustrate to you how much is coming in. Okay, yes. So now we have to now first open up the goodwill account. Okay. So originally with the question, this is the first thing you need to do. You need to open up the goodwill account. Okay. Step one, open up the goodwill account. Step one, open up the goodwill account. Okay. The journal entries, whenever you're opening up the goodwill account, all right, is you're going to debit the goodwill account, and they're going to credit the capital accounts. Okay, debit goodwill account, and you credit the capital accounts for the partners. Okay, so goodwill, we are debiting it 27,000 because they've told us in the question that goodwill is valued at 27,000. So you debit the goodwill account 27,000 kwacha. Remember, goodwill is an asset account, so an asset account increases with the debit. All right. Then the partners, okay, we are going to credit them. Those 13 fives that we calculated here, okay, these 13,500s, we need to credit Zulu and Tamar. Okay, so Zulu 13,500, Tamara 13,500. Okay. So that's the first step. You open up the Goodwill account. Any questions before I go to step two, where we now write off the Goodwill account? Write off Goodwill. Okay, so to write off goodwill, it's just the opposite entry. Okay, you're going to debit the partner's account. Okay, and then you're going to credit the thing, the goodwill account. Okay, so these entries here, these values we calculated here, they're going to be debited to each of the partners' accounts. So we debit Zulu first. Zulu got how much? 9,000 kwacha. Debit Zulu 9,000. Tamala debit 12,000 kwacha. Then Banda, because Banda has also come in. So when you're writing off, remember this, when you're opening the account, you just start with the existing partners. Then when you're writing off, then you also include the other partner. So Banda, 6,000 kwacha. And then you credit goodwill, 27,000 kwacha. So these journal entries, they're going to do the same thing as what this table has done. Okay, these journal entries are going to calculate the amounts that need these people, the amounts that Zulu and Tamala need to be compensated. Yes, so these are the first two steps. Open up the goodwill account. Step two, write it off. Then now we take it to the capital accounts. Any questions? Okay, so now we can form up a capital account. Okay. Capital T account. Mhm. Okay. No, you can ask. Mhm. Yes, 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 yes. By debiting the partners, it's since it's like we're taking it out basically. Because remember the partners. Think. Let me show you like this. Maybe in a T account here. Okay. Let's look at the T account for maybe let's say Zulu. All right. Here we credited him 13,500. This is his capital account. Okay, his capital account 13,500. Now we're writing off the goodwill, so we debit 9,000. So 13,500 minus 9,000, it means Zulu's account just increases by 45, which is coming from Banda. If we look at Tamala's account also, Tamala, we credited 13,500. We're writing off the goodwill, so we debit. Remember, these capital accounts, they increase with credit, so a debit entry means you're just reducing. By writing off the goodwill means you're reducing. So you debit 12,000. Okay. So all in all, Tamala's account is going to increase by just 1,500. This 1,500 is coming from Band. Then Banda's account is just a debit entry. And it's this 6,000 for Banda here. Banda, it's 6,000 here. Yes. So this 6,000 is accounting for this and is also accounting for that. So now we're going to have to show that in the capital account. All right. We're going to have to show that in the capital account. So in essence, when Zulu gives these people this money, this 4-5 and the 1-5, it's like now their capital accounts are increasing. Zulu has given them, here's your 4-5, you put in your capital account. Here's your 1-5, put in your capital account. Okay. Banda is compensating them. Yeah, it's like, yes, yes. So it's like Banda is compensating. Like here, what we can say is Banda is compensating them with the goodwill which he had to get by coming in. Okay, because when when he's coming in, we saw he was supposed to get a goodwill of 6,000. So he's not going to be left alone and get that 6,000. No, that 6,000 has to be given to the other partners. So the capital account, on the debit side, we have Zulu, Tamala, Banda. That's the debit side. Then on the credit side, we have again Zulu, or maybe let me put a line dividing so that and here we have Zulu, Tamala. Here it has to be details here. So here we have Zulu, Tamala, and Band. So on the debit side, we're going to say balance brought down. Okay, we've been told that the capital balances 40,000 Zulu, Tamala 60,000. Tamala 60,000 here. Next, you're going to put here goodwill creation. 13,500. 13,500. Then Banda, we've been told he's bringing in as capital 20,000 in non-current assets and 5,000 in cash. Okay, so for Banda, you put here non-current assets 25,000, cash 5,000. Okay, that's on the credit side. Then on the debit side, okay, you're going to put the goodwill write off. Okay. Zulu 9,000. Using all of these figures are from those journal entries I did. So Zulu 9,000. Okay, so when you subtract 13,500 minus 9,000, you remain with a credit entry of 4,500. Okay. Tamala 12,000. So when you subtract 13,500 minus 12,000, Tamala remains with the credit entry of 1,500. Then Banda, we put 6,000 here. Okay. And this 6,000 is the one he has to give Zulu and Tamar. Then we get our balances. So Zulu, 40,000 plus 13,500, 53,500. Okay, so we want to find what's his new balance. Okay, so balance carried it down. You say balance carried it down. Okay, you're going to say 53,500 minus 9,000. Balance carried down is going to be 44,500. So Zulu's new capital balance is 44,500. Which in essence, colleagues, remember 40 pin, then plus a 4,500 from Banda, 44,500. Okay. Any questions before I go to Tamala? Okay, Tamala 60 plus 13,500, 73,500. Balance carried down. You're going to say 73,500 minus 12,000. You get 61,500. So balance brought down 61,500. So if you remember, Tamala had 60,000. Then Banda is giving her a 1,500. So her balance, that's why it's 61,500. As I said, these tabulations I was doing here, they can also appear here. They'll automatically appear in this capital account here. Okay, because as we can see, these new balances are reflecting how much each of them has got from Banda. Okay. Then Banda, 25,000 plus 5,000, that is 30,000. Okay. But now he has to give off a sixth. From this 30,000, he has to give off a sixth to the other partners. So 30 minus 6,000, 24,000. So Banda's capital account, 24,000. Yes. Any questions? That's that for the capital account. 73,500. 30,000. So to make life easy, when a new partner is coming in, okay, the goodwill that was supposed to go to them has to go to the existing partners as compensation. That's what has happened here. That 6,000 when we're writing off the goodwill, that 6,000 for Banda, he has to compensate the other partner. So basically, the new partner is compensating the old partners with their share of the goodwill, basically. And as you can see, their capital balances have increased. Zulu at 40,000, Banda gives him a 4,500. His new balance 44,500. Tamala had 60,000, Banda is giving her a 1,500. A new balance 61,500. Zulu came in with capital of 30,000, but 6,000 from there has to go to the other partners. So his balance reduces to 24,000. Any questions before we now go to the next part? Which is the statement of profit or loss. Okay. So the second question now. Prepare the extract of the statement of profit or loss and other comprehensive income for the year ended 2019, showing the appropriation of the profits. So part 2, the appropriation account. This is where we are familiar. Colleagues, what's the first thing we need to do for appropriation account? What is the first item that comes in? Oh yeah, net profit then interest on drawings. Net, but you're correct. Net, interest on drawings. Yes, that's the first item. So net profit 63,008. Okay, so we say add interest on drawings. Okay, so here they told us that drawing included payment of salaries to the partners. Okay, so who is on a salary here? Mm, Tamala is on a salary of 5,000. So minus 5,000. So our drawings 9,000. Banda is on a salary of 4,000. So we say minus 4,000. We get 5,000. Okay, so those are the drawings. Zulu 15,000, Tamala 9, Banda 5. And interest on drawings, we've been told interest on drawings 5%. Okay, so Zulu, you start Zulu. Zulu 15,000 times 5%. What is 5% of 15,000? 750. Tamala 9,000 times 5%. Banda 5,000 times 5%. So 750 plus 450 plus 250. One thousand four hundred and fifty. Okay, so we add 1,450 plus 63,080. Okay. Any questions before we go to the next part? They told us the drawings here, and then they told us drawings included payment of salaries to the partners. Yeah. We just deduct their salaries. Mm. Before we do the interest on drawings, we have to do, because this question has said this here. If this wasn't here, we would have just got these same amounts here. So always pay attention to the additional information, because if you skip this, you'll get wrong. You'll be in error. How did Banda, huh? It is the question. Yes. You confuse people. You start confusing people. So you start confusing people here. Just flow with the question, okay, Mr. Casson? Mm, okay. Less. Now we say interest on drawings. Interest on capital. Then less interest on capital. So we use the new capital amounts. Don't use the old ones. Okay. You use these new ones here. Okay. All these new amounts here. Zulu, Tamala, and Band. So Zulu, 44,500. Interest on capital was what? 2%. So 44,500 times 2%, what did we get? Tamala, 61,500 times 2%. What do we get? Banda, 5,000, 24,000 times 2%. So we add the total, then we be subtracted from that 64,000. So 890 plus 1,230 plus 480. 2,190. Then salaries, Salaries, Tamala. You're welcome, son. Tamala 5,000. Banda 4,000. So 4 plus 9,000, 4 plus 5,000, you get 9,000. So we're subtracting, huh? 64,530 minus 2,190 minus 9,000. What do we get? We added these three: 890 plus 1,230 plus 480. Mr. Casson. Mm, yeah. Mr. Emmanuel, you cause confusion when someone is studying alone now. 2,600. Okay. So 64,530 minus 2,600 minus 9,000. Excuse me. And someone to counter check the figures. We don't want, huh? We've reached what the current accounts, huh? And then now we're having different figures. Mm. Mm. Sure. Who was it? Mm. No, who in the video, who was giving the figures? Yeah. Mr. Kesson. Mm. Mr. Casson, you are giving us wrong figures. Thank you, Mr. Trumbo, for confirming that. Is it on appropriation? Yeah, okay. So when Mr. Casono gives an answer, we have to double check. Huh? Okay. So let's confirm, colleagues. I need to hear three from three different people. Okay. Are we all getting 52,930? Okay. Okay. Then next, this is now where we share the salaries. Okay. Salaries, oh, not salaries. The profit share of profit. Sorry, share of profit. Yes, yes. So, Zulu. Let's see what was the new profit sharing ratios. Now, at times, colleagues, you might be even told to find the new ratios. So just pray and fast that your question don't ask you to find profit sharing ratios, because you have to start using mathematics now. You say, okay, do you know what to do if you are not given profit sharing ratios? How you can find them? Okay, the capital balances. Yes, you can use the capital balances. You get the total capital balance. Then each person's capital out of the total capital, you get fractions. Then those fractions will be your profit sharing ratios. Okay. Mhm. So just pray. In case the prayer doesn't work, you add the capital balances. Okay. They'll give you capital balances. You add them. Okay. Let me finish this, then we'll do that simple example. Okay. Is that okay, Mr. Trump? Because we can start losing the masses here. They start wondering, what's happening here? We've gone back to profit sharing. They can ask now. You can find someone who has been kicked out. Sir, hey, so profit sharing. Why are we calculating again? So Zulu 3 over 9. Someone just remember this for me so I'm not scrolling up and down. Zulu 3 over 9, Tamala 4 over 9, Banda 2 over 9. So Zulu 3 over 9. So 3 over 9 times 52,930. What do we get? And always remember these profit sharing ratios, how they are applied with goodwill. So when you're sharing out the goodwill, you're using the profit sharing ratios. Okay, once you're opening the goodwill account and when you're writing it off, you'll be using profit sharing ratios. Yes, 3 over 9 times 52,930. Ha. So Trumbo. So that when someone goes through, they'll be like, hey, Mr. Trumbo, so uh-uh. 17,643 colleagues. Are we all getting that? Mama, 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 mama. Mm. When decimals come in, okay, we'll use point 0.3. 4 over 9 times 52,930. Because as the accountant, this is the part where you have to be very careful. Don't give the partner the wrong profit or a less share of the profit. They will 3,000 like that. Then band that 2 over 9 times this amount. Mhm. 11,000. You know why I'm putting a I've put a point three. So we don't have any remainders. Okay. This one's two. Rounding off. What about this one point four? Because I want to make sure that we get a total. And then this one point three 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 three. So there will be a one in remaining. Okay, colleagues, to make life easy, okay, just put at least make sure because 3 plus 4 plus it gets a whole number, okay? Just use Crook's law and do that, okay? So that you do not want to remain with a decimal place here, okay? Crook's law. Many, over a one way. Or maybe the thing is, you tell the partners that, okay, guys, there's a one way, or there's a one way remaining. Who wants to get it? Mm. Okay, you ask the partners. There's a one way. Who wants to get it? I know they won't fight over a one way. Now let's see. I think we had this three and a four. That is seven plus two. That is a nine. I don't think they are going to balance. It, it won't balance, Mr. Kasson. Unfortunate. The reason is like this 4 over 9 you get decimals. This 2 over 9 you get decimals. So those decimals will keep bringing decimals. Unless you had like 3 over 9, 6 over 9, 9 over 9, something like that, where you can get a whole number. Okay? Do not worry, you won't be penalized. Over a one in Ngwe, you won't be penalized. Okay. Yes. Any questions before now we go to the current accounts? Before we go to the current accounts. Okay. Now we go to the current accounts. This is where each individual partner's transactions. going through. Okay, so when you add this, I'm assuming you get 52,980. Zero. We can now go to the current account. Let me see those who remember the current account. What goes on the credit side? So we've forgotten what goes on the credit side. Yes, this is the okay. That's the that's the capital accounts. You inflate one partner's current account. Capital introduced is in the capital account. Mm. Yeah. Yes. Mm. So just remember on the appropriation account, yeah, whatever is list on the appropriation account comes on the credit side. And then whatever is added will go to the debit side. So we first see the current account balances. Okay. Current accounts Zulu 1,200, Tamala 6,000. What does a debit entry mean in the current accounts? Yes. All right. Salaries. Banda has got no amount brought down. Salaries. Zulu is not entitled to a salary. Tamala 5,000. Banda 4,000. Interest on capital. Zulu 890. Banda 1,230. Interest on capital. Where was that? 1,230 for 8. Mm-hmm. Uh-huh. It's not in the question here. He is not eligible. Share of profits. Zulu 17,643.3. Tomorrow 23,000. Sa. Sa. This is where I'm getting my information from. In these questions, they always give you the balances for these accounts. Yeah, man. She's owing, and again, she's also getting, mm, and she's also making a good profit. 11,763, 762.3. Yeah. Yes. And on the debit side, drawings. Sulu 15,000, Tamala 9, Banda 5. And then interest on drawings. Zulu 750, Tamala 450, Banda 250. All right. So now we can get our balances. So we start with Zulu. Credit side 1,200 plus 890 plus 17,643. Accurate figures, please. 1 2 plus 890 plus 17,643. 19,750. Okay. So we compare with the debit side. 19,073, 733.3. So we find the balance carried down. We're going to say 15 plus 750, that is 750. So we're going to say this 19,703.3 minus 15,750. What do we get? You get the total on the debit side and you get the total on the credit side. Then you subtract. Okay, so yes, we are dealing with Zulu first. So his total debit is 15,750. 15 plus 750. So when we subtract 19,733.3 minus 15,750, what do we get? 3,983.3. Okay. Any questions? And have we confirmed this fig? 3983.3. Okay. Tamala, we know the credit side is bigger. So 5,000 plus 123 plus 23,524. 24. All right. Then we compare it with the debit side here, which is 6 plus 9, 15,000. So 15,000, 15,000, 450. Okay. So 29,754.4 minus 15,450. 14,000. Okay. So 14,304.4. All right. Then Banda, 4,000 plus 480 plus 11,763. Sixteen thousand 243.3. Say it again, the number again. 16,000. Okay. Mr. Twambo, are you confirming? Thank you. Should this question come and this question comes and you don't see these figures, what are you supposed to do, colleagues? This same question comes and you find you're not getting these figures. Okay, there are those people who are good at memorizing figures. Okay, so 16,242.3 minus 5,250. What do we get? All right. Any questions, colleagues? That's how you do the current account. 10,992.3. Okay, so yes. And that's how you do with this question here.